Hey everybody, happy to see you, happy to be here. My name is Rob Booker, and I want to talk to you about trend trading and pivots and whatever else. I was going to pull out all the pictures of me and Lamborghinis and sailing on the yachts with the Swedish models, and then I realized I don't have any of that stuff. All I have is about 18 years of experience trading the markets. Not a superhero. I don't wear a cape. Not the best trader in the world. I'm not the worst trader in the world. And if you enjoy having a good time and just hanging out and geeking out on technical analysis, that sounds like a great idea. Don't really have anything that I'm trying to sell you today or trying to get you to come to. You could come on over to the website later on, and I got some indicators over there for you and whatnot. But why don't we just jump right into this? We got about 40 minutes here together. I may not even need the entire time, but let's just do this. I'd love to hear from any of you anytime. I don't know if I can see the questions in the webinar, and that's fine if I can't. It's no big deal. I'm going to guess that there's a mix of people who trade stocks and other financial instruments. I'm going to, oh, there we go. Thank you for letting me see the question. So let me know what you trade. You trade stocks, you trade options, you trade currency, you trade Forex, you trade Bitcoin. I've been doing some cryptocurrency trading recently, and that's been a ton of fun. Not necessarily what we're going to talk about today, but I've been having a good time with that as well. So, all right, welcome. Glad to be here. Let's take a look at the screen in front of us right here. This is just American Outdoor Brands Company. I don't know if this company makes toilets. I don't really know. I don't really care. Doesn't really matter. Doesn't make any difference to me what in the world they do. As far as I'm concerned, they could manufacture, like I said, bathroom equipment, or doesn't matter to me. Don't care. But there's something interesting going on this chart, which is pretty much universally applicable. I don't want to say things like that because anytime somebody tells you, hey, here's the greatest thing that ever happened, and it's the best idea that anyone's ever had in the world, you pretty much know that's not going to work as soon as you start to try it out. So everything that I'm here to say is subject to your own experience, of course, and most of it works and whatever else. All right, take a look at these blue lines on the chart here. These are daily pivot points, and all of the blue lines are daily pivot points, but I'm just going to circle a few of them. Now, daily pivot point, for those of you that don't know how to add it to your screen, is, I was looking at a long-term chart yesterday. A daily pivot point, this is tradingview.com, but every major charting platform can show pivots. You don't have to buy this indicator. You just reach out to your charting platform company and you say, hey people, how do I get pivots? And then they write to you and they say, here's how you get pivots on your charts. I'll show you how to do it on tradingview.com. You right click on the screen, you choose insert indicator, you start to type in pivot, you go to pivot points standard and click on it. And then all of a sudden those pivot points pop up. And up here in the upper left-hand section of the screen, you can see the indicator. Click on the gearbox for settings. Click on time frame daily. Style, I usually color a pivot point blue, and I don't show any of the support or resistance levels, which are alternative. Okay, so I've already got that up on my screen. I don't need to add that indicator again. So I'll just take a look here. Now, pivot point is calculated by taking yesterday's high, adding it to yesterday's low, adding it to yesterday's close. So adding all three of those numbers up together, and then dividing that by 3. Most of you already know that. And pivots were largely used by Abraham Lincoln. I'm just kidding. They weren't really used by Abraham Lincoln. They were largely used by floor traders in the old days when those big sweaty guys used to, like, I don't know, eat hot dogs and drink beer on the floor of the exchanges and scream at each other and point their fingers at one another and say weird things and wear those funny jackets. Largely used by those folks, those floor traders. And sometimes they were referred to as floor pivots. Anyway, when they came off the floor, they still traded with pivots because it's what they knew. It's what they were accustomed to. So let's take a look at these on the screen here. I'm going to grab an arrow indicator so I can really point at these really nicely. You know, I might even do, yeah, you know what? I think I'm sharing my entire screen, so I could even grab my little drawing tools on Windows. Let's try that out. Okay, here's a pivot. Here's a pivot. Here's a pivot. There's a pivot. There's a pivot. And there's a pivot. Lots and lots of pivots. These daily pivots, most of the time, are hit by price. You can see that I'll circle the areas where it's hit by price. Right here, you can see candles touching the pivot. Right here, you can see candles touching the pivot. Right there, you can see candles touching the pivot. Right here, you can see candles touching the pivot. If I was going to start a television series, I would call it Touched by a Pivot. And I would see if I could get Angela Lansbury to play a nice old lady that lived in a little quaint house in Maine. And I don't know, it just sounds, doesn't it sound kind of dirty? Touched by a pivot just doesn't sound right. So I'm just going to stop saying all that and we're going to move on. Most daily pivots are touched by price. If you forward on the charts, you can see most of the time a pivot point will be touched by price on the day that it's created. And I just call those hit pivots. Dick Clark used to have a television show in the 70s called Hit Pivots. And it would be all the best pivots from last week that were playing on the radio. That's also not true at all. I hope you guys like to have a good time, because if you don't like to have a good time, this is going to be a terrible presentation. So those hit pivots are, they're normal. Like in most cases, for most stocks and lots of commodities, if you like commodities, between 85 and 90% of the time, a pivot will be hit by price on the day that it's created. It's consistent, it's reliable, it's a beautiful thing. But sometimes, occasionally, as you can see here on the screen, these ones that are circled in red, sometimes a pivot is not touched by price on the day that it's created. And I'm going to delete that line. I'm going to pull up my drawing tools again because I like to draw on the screen. Oh, I'm going to try anyway. Well, the same problem that we have on the big giant monitor, Nate, we have here on the computer. There we go. All right, so occasionally price doesn't hit the pivot on the day that it's created. I call this a missed pivot. Missed pivot 2017 was actually from Alabama. Just kidding. It's also not true. One time I was doing a webinar and people were like, who is Miss Pivot? I'm like, oh, she's one of the Muppets. There's Miss Piggy, there's Kermit, there's Miss Pivot. Anyway, as soon as okay, I was going to impersonate a Muppet. But those are missed pivots, not touched by price on the day that they were created. These are special and important. Now, you might not think it's important. And like I said, I'm not better than anybody else, all right? I made a shizload of money in the mid-2000s trading the currency market. And I've made some money since then. I've made and lost lots of money back and forth. But I'm not anybody's boss. I'm not a guru or anything like that. I'm just going to show you what works for me on a very consistent and reliable basis, as long as we have that clear. This missed pivot right here is an indication, every single one of these, but in particular, the first one in a series. When price misses a pivot, that is an indication of an oncoming trend. What this means is that, so on, I don't know what day of the week it was, but it was on the 22nd of whatever month, November. On the 22nd of November, price was traveling upwards and did not hit its pivot. What that's going to tell us is that that is an indication that price wants to go up from there. The first missed pivot in a series is an indication that price wants to trend in that direction. And we can create a trade out of that missed pivot. So let's do it. Let's create a trade out of this. So at the end of trading on the 22nd, what we can assume is that price is going to travel upward for a period of 48 to 72 hours afterwards. We can make that assumption quite reliably. So what I'm going to do in those situations is wait for a retracement and wait for price to just come back down in the first hour of the next day, the first hour of trading in the morning. That's the most important time, the first hour that the market is open. I'm going to look for that dip, and I'm going to buy that dip. I'm going to buy when other people are fearful. I mean, they're not scary fearful. They're not panicking like they were the other day on Bitcoin. I bought that too. And I'm going to buy that. Now, I'm going to hold that trade for a period of 48 to 72 hours, or until I can't stand it anymore. I might also hold that trade until the relative strength index, this is the RSI at the bottom of my screen, goes to RSI, or until the DeLorean goes to ludicrous speed, or what is it, 77 miles an hour, and then the flux capacitor kicks in, 88 miles an hour, and then if you hit this stock with 1.21 gigawatts of power, you know that it's going to shoot upward. All right, it's not enough to look at one example. That's kind of dumb to just look at one example. I just have a list of my favorite stocks here. This is AMAG. I think I've looked at this stock before, but it apparently doesn't have a lot of volume. So let's just throw that one in the bin. Let's look at something that might have more volume here. Wow, some of these don't have any. I just was picking up a random series of stocks here. So this is, H&R Block. Great. This is perfect. We got two really good examples. We got a bunch of examples here that I want to show you. Now they're going to get better and better as time goes on, but let's take a look here. Number one on the list, H&R Block travels upwards and misses its daily pivot. It retraces, and let's just say, just for the sake of argument, let's just say we buy it. Let's just say we buy it right away. Let's say. And then we give that trade 48 to 72 hours to move upward from there. It's a pretty nice trade. We'll talk about stop losses in a minute. Everybody, we'll get to that. And then let's say you didn't catch it on that day. Let's say you caught it here when H&R Block was dropping below the daily pivot. And let's say that you shorted H&R Block on the retracement the next day. I'm not a real big fan of shorting stocks, even though I've been short all my life. Let's say you shorted it, and let's say you gave that 48 to 72 hours. H&R Block does a pretty nice job of falling from there. Well, let's say you don't even get in on that. Let's say that you catch it right here, and you watch it travel upward and miss its daily pivot. And then let's say you buy it right here. Let's just say you did, and you give it 48 to 72 hours. You're at least going to get back to break even. My suspicion is you'd get even better than that, which you do. Now, all of that's well and good, but maybe we could refine this even a little bit more. Maybe we could even fine-tune this a bit and get in at a more favorable price. I like to, when I see a financial instrument that I like to get it on sale. So let's look at that. I'm going to take a look at how to get these on sale, and on sale is in quotation marks. And then I'm going to take a look and see if there's any questions that popped up in the questions panel. All right, let's say that we saw this missed pivot, and I'm just going to call that MP. And let's say that designated that we want to short H&R Block. What I might do in a situation like that is wait for the RSI to go overbought. And as soon as the RSI goes to overbought, so I might even wait, as soon as it goes overbought, then I'm going to initiate my short position. That's going to get me in at a better price. It's going to keep my stop loss closer and my profit target farther away. Let's say that we instead watch for this one, and price is moving upward. And let's say that that tells us that we want to buy H&R Block. We might wait till the RSI goes to oversold. And then we might initiate our buy position here, and we're going to get a much better chance at profiting from what is a very consistent move. So I'm going to summarize what we've learned so far, that these levels, these pivot levels, these missed pivots, whenever you see one, is an indication that over the next 48 to 72 hours, price is going to trend, short-term trend, swing trade trend, even short-term trading trend in one direction or the other. Hey, this is Harry from one direction or the other. All right, let's take a look and see if there's any kinds of questions, comments, or jokes. Ron's laughing. So this is a bullish condition and whatever. Okay. Yeah, no real, if you have any questions, I'm always happy to hear them. Let's just take a look at more stocks. Let's just look at more. I'm just going to randomly go back in time because I don't know. All right, this is interesting. Oh, this is good. This is going to be real good. It's going to be real good. I like this one a lot. Let's say you see cars.com. It misses its daily pivot by traveling down. And that tells us that we want to short this stock. You might also do some fundamental research and find out that this stock is total garbage. I don't think it is. I'm just saying that you might do that. Then you might wait till the RSI gets real close to overbought, and then you might initiate your short position here. And you might give that just 48 to 72 hours. What I don't like about this right here is that it never got to fully overbought. So really, this is not a trade. Let's require it to do what we said we wanted it to do. Then the very next day, it misses a pivot again. This definitely tells me I don't want to trade this. I want to trade the first pivot in a series that is missed. I don't want to trade the second one in a series that's missed. I can't come in on day two, see the pivot missed in the same direction, and make that trade. That's garbage. I'm not going to do that. And I've been doing this since 2006. My friend Gary came out from New York. He was a hedge fund manager. And we fired up the Bloomberg terminal and downloaded just gobs of data to do all of this. And we just decided that we were going to trade the first pivot in a series that was missed, but not the second. So you can trade the first one, but you can't base a trade on the second one. This is let's say you walk in to your trading room on a morning and you see that yesterday's pivot was missed, and that sets up a buy trade. Where on this chart do we want to look for a buy trade? Right here when price goes oversold. That's the buy right there. I don't really know how that trade works out, and let's take a look. That's fine. You hold that for 48 to 72 hours, and that's beautiful. It's a beautiful thing. It smells beautiful even. I don't know anything. I mean, I kind of know about cars.com. I actually really like this stock. Let's take a look at another example. This is going to answer another question that might come up otherwise. Here's the first missed pivot in a series. And then we go to the next day and another missed pivot is there. And then we go to the next day and we never get overbought. We never get there. If you don't get overbought within 2 days, then there's no trade. No trade. X, 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 X. No trade. Forget it. Garbage. Go away. We're just going to forget that that ever happened. We're not even going to worry about it. We're just going to forget that we ever even saw that. I know some of you trade other asset classes, and we can certainly look at that stuff. But what I'm trying to demonstrate here is it really doesn't matter what financial instrument you look at. It doesn't matter. I mean, this is randomly. This is Cisco. I don't care what you pull up. I mean, it doesn't matter. So here's Cisco. Here's a missed pivot. Price is moving down, so we know we want to short Cisco. Price goes overbought 48 hours later, 36 hours later, and we short it. Now you could say, well, that doesn't move far enough. That's not going to move far enough for me really to be involved in it. Okay, fine. I mean, I get that. Totally fine. I get it. Not every stock is going to be a stock that moves a lot. So naturally, you might want to look up stocks with a lot of volatility that tend to move quite a bit to do this kind of thing. You might also say, I don't really feel comfortable shorting stocks. Well, then don't. I mean, there's all kinds of other things that we can do. Oh, there's so many good examples of stuff. You could probably see, let's do a little quiz here. Can you see the trade on this chart? TikTok, Jeopardy music, TikTok, blah, blah, blah. Missed pivot, overbought, short it from there. We fall from 51.50, thank you, Van Halen, to 47 in like 30 hours. That's a pretty fantastic rate of return. Now, I'm not going to spend a lot of time because I know that not all of you, or maybe not even any of you, are currency traders. But you could even look at the currency market on stuff like this as well. This is the Australian dollar, Canadian dollar, which may be the greatest financial instrument of all time. It may be, I'm not exactly sure. But when you look at super high volatility financial instruments that tend to trend significantly and massively, like the currency market, we got to change our rules around just a little bit. So let's say this is a missed pivot or this is a missed pivot. Who cares? Let's just say the first one's a missed pivot, which it is. And it designates that we should be buying. You can see that we don't get anywhere close to oversold on the relative strength index. We don't get anywhere close to it. So in these cases, I might just draw a trend line across price and then buy on a break of a trend line for really volatile financial instruments, especially cryptocurrency or just straight up currencies. In those instances, that's the kind of thing I want to do. I just want to look at more. I just want to look at more stuff. Let's see, exotics, long-term stocks. Yeah, let's look at some more stocks. I like looking sometimes at some of the lower priced ones because there can be a higher percentage move. But as you can see here, look at this. This is garbage, right? Who could trade this? There's no volume there. Wow, what happened to all the volume here? What a load of garbage on those ones. Yeah, nothing really worth looking at there. Yeah, I have a list of low-priced financial instruments that I consider trades on from time to time. Let's just try to pull this up separately and see if we can pull this up. Let's see here. MasterCard. Let's take a look at MasterCard. Here we go. MasterCard's another good example. Here we go. Missed a pivot here, and we never went oversold, ever. And we never even got a trend line. So let me give you a third way to get into that trade. If you really like a financial instrument because its fundamentals are spectacular, you could wait for the next day and a retracement simply to the next day's pivot. But the only time that you ever want to do something like that is if you really feel like that financial instrument is super high quality. Because with something like this, maybe it's a stock with great fundamentals, for example, you're just not necessarily going to get a really good chance to get in on the trade. Does anybody have a favorite financial instrument that's here today? You're in the webinar, you're hanging out. We want to type into the questions box. You type in your favorite stock or maybe a financial instrument that you trade on a regular basis or something that you're trading now. And I'd be happy to pull that up and look at that together with the other stuff that we're looking up. And then everybody wants to look at gold all the time. I'm happy to look at gold for you. Gold does not work as effectively on stuff like this, but we're going to go ahead and look at it. So we're going to look at, I'm going to look at spot gold. Yeah, that'll work. QQQ. Thanks, Donald. Okay, Jack, we'll look at gold, and Donald will look. Oh, and Goldman Sachs. All right, we'll take a look at those. So here's gold. Here's a good example. I'm just, as you can see, I'm not trying to pull up something special. I'm just going to show you the first example that shows up on the screen. We have a missed pivot as price goes up. We retrace lower. We get an oversold market condition. That's our buy trade. I like that. That's kind of what gold looks like. Gold's going to be a little bit tougher because gold isn't like the tradable instrument that it really used to be, but it's not terrible. As you can see here, I mean, there's plenty of it works. I mean, we don't. It's not a terrible methodology on gold. I just want to be fair. Okay, of course, everything we're looking at works perfectly fine. There's another one in front of us right here. I just want to be transparent. I mean, misses a pivot, it retraces. You want to take it for a ride. Gold's kind of like these coins and whatever else. Sometimes these trends are so significant and substantial that you have, missed pivot, missed pivot, missed pivot, missed pivot. Here's the first missed pivot in a series, and we get close to oversold, but that's as close as we get. And you're going to have to just use trend lines and whatever else when you see these, because you just don't get the same chances. Let's take a look at Goldman Sachs. Reset the chart. Take a look. It's missing its daily pivot going down today. I know Goldman reported its first loss in 1,257 million years or whatever. You can see here, there's a couple ways to look at this chart. You get a missed pivot as price goes up. We retrace going lower. We go oversold on the relative strength index. That turns into a buy. And you want to give that 48 to 72 hours. And it's going to rise from that level. Perfectly fine. And it's going to do that. It's going to rise from that level. It's going to do that very nicely. Or you could look at, this is a really good example. I'm glad you said Goldman Sachs, because check this out. Goldman Sachs misses a daily pivot as it travels lower. And then we look for the relative strength, the relative strength index to go overbought 1 day, 2 days, 3 days. It's just too long to wait. Even if we short it here, I'm sure that probably does fine, but I'm done with it by then. I'm done with it. Just don't care. I don't want anything to do with it at that point. I just don't care. Okay, QQQ. I haven't looked at the QQQ since forever. Let's take a look and see. Oh dear Lord, look, these are insane, right? It's kind of hard to take any of this seriously. Let's go through and let's just play around with this one. Okay, so QQQ. I mean, clearly it's a rocket ship, right? You might want to favor the buy side. Misses a daily pivot here, going up. Retraces. Maybe you use a trend line. It's the best you can kind of do. It's one of these things that's never gonna get lower. The missed pivot does tell you a trend is coming. If you really like it, you could enter position 1 here. If it drops at a better price, you could get in a little bit more there. But that's number 1 on this screen here. Let's see what else we got. Here's another one. Here's another missed pivot. We could try this out. Take a look at this bad boy. Missed pivot. Price was traveling up. Retraces. We go into oversold territory. So we're going to buy it. We wait 42 to 72 hours and we do okay. Not great. Not great. Not as good as we would have liked. Then it misses a daily pivot going lower. So it tells us we might want to look at short trades, but we don't go overbought. It just doesn't happen. So maybe we could draw a trend line here and trade against that, especially if you see a big spike. It tries to spike upward. Those are always nice places to sell. But this is a great financial instrument. Nothing wrong with this one. Nothing I'm going to share with you doesn't work. I don't know if anybody out there likes shorting the QQQ. There's a missed pivot going down. I guess you could draw a trend line underneath price and short it because it just doesn't quite get all the way up to overbought. That's fine. I mean, you get a feel for this, right? And the feel that you get for this is that when price misses a daily pivot, you want to look, wow, it does it all. It does it that day. It designates that price is going to continue traveling in that same direction. I don't like trade. I have other ways of trading the cryptos, and this really isn't my preferred way of doing it. But let's just I'm going to go to a random date in time on Citigroup. Just because September 1st. Let's try to break this. I don't know anything about September 1st. Yeah, good, great. This might break this. There's a missed pivot, first in a series. Now, if we draw a trend line, we do fine. That's fine. If we wait for it to go oversold down here and we buy it, we get a little bit of a boost, but then we drop. So what do we do about that? What about when it breaks? What about it when it gives us a really big frowny face? Well, there's a couple things that I want to point out on the chart here, risk management wise and so forth. So if we buy it here or we buy it here, we want to give it 48 to 72 hours. We really want to give it that period of time. That's what we would prefer to do. That's number one. And by that, I mean, you want to give it a time-based stop loss, not necessarily a price-based stop loss. Like a price-based stop loss might go right here, and a time-based stop loss might give you all the way until over here for this to work out. Second thing I want you to, and I'm sure some of you are already seeing this on the chart, the second thing you can notice is that while you are in this, or considering it, we miss another pivot going down. And then this takes precedence. That means we want to start looking at short trades. So this whole idea of even waiting to buy it kind of goes off the table. And we kind of go, oh, forget it. The move up already happened. Now we're looking for sell trades. And then, trade it on a break of a trend line or see if it can go overbought. I mean, I just pulled up a random date and time. And the reason I did that is I don't want to give you the impression that I'm showing you only financial instruments that I think work out, right? I don't. All right, so can I elaborate further on the rules? Yeah, sure. Let me walk through that. That's a nice point. I'll try to do this the easiest way possible. Number one, look for a missed pivot. Number two, what you want to do then is look for an entry with the trend or the direction it was moving based on the RSI going overbought or oversold, or a trend line, or you could even say just a retracement for instruments that just move so much you can't stand it. And then you want to give that trade 48 to 72 hours to work out. Now, if you're looking for rules that are more specific than that, they really don't need to be. Once again, this pivot is missed as price is traveling upwards. So we want to buy. Price retraces, breaks a trend line. We could buy it. And then we're going to give that 48 to 72 hours to work out. We want to see movement in our favor within 48 to 72 hours. And we want to give it that full length of time in order to move. Now, if you're trading that in the currency market, those rules are reasonably similar or exactly similar. Let's take a look at, in the currency market, I got to look at the 60-minute chart because it's open 24 hours a day. So here's the currency market. Like I said, the only thing that changes with these rules in the currency market is that missed pivot here, and that says we want to sell. because price was traveling lower and it missed the pivot. Now with the currency market, we're really not going to see price get to an overbought area quickly enough. So what we want to do on the very next day is we just want to sell this on the very next day. And we want to give this 1, 2 to 3 days to work out in the currency market. But it doesn't have to be more complicated than that. I mean, I'm just pulling up random currency pairs, New Zealand dollar, Canadian dollar. I haven't traded the New Zealand Canadian dollar for about 253 million years. Once again, it's the same stuff now. I mean, at this point, I'm probably boring the fudge out of you all, but here's a missed pivot as price is going up. That means we want to buy it. On the very next day, we could draw a trend line or something above price and buy it. And we're going to give that 1 or 2 or 3 days to work out. Done. It almost gets oversold right here. Almost. Doesn't get there. So, with the currency market, you don't necessarily want to wait for oversold or overbought inside of those rules. It's not necessarily what you want. Take a minute here. I'll just remind you, you can just go to my website, robbooker.com. I have robots that automatically trade this stuff without you having to sit in front of the computer because I'm lazy. I'm not really lazy. I mean, I say that, but that's not really true. I'm not really lazy. Also give away indicators for free that you can use to plan these trades or take these trades. And maybe we could just take a minute and take a look at that. Let's say, for instance, the New Zealand dollar, Canadian dollar missed its pivot. Let's just say, go down to the 15-minute chart. We may have to go down even further. It may take me a minute to even find one of these trades. Yeah, I'm gonna have to really search for these because okay. Yeah, this is a good example. Yeah, this is a really good example. Okay, so right here on the screen, let's see if I can circle this okay. This is a missed daily pivot. Great. We know that we want to look for buy trades. I have a robot that I turn on then, and this robot looks for what I call Knoxville divergences, which is when price is falling but momentum indicators are rising, and it buys automatically every single time those signals occur, and it builds positions. So I don't have to sit in front of the computer and buy those. It just will build a position automatically for me with a predetermined profit target. So I just have to, I could just say, hey, listen, the New Zealand dollar, Canadian dollar missed a daily pivot. I know I want to start buying this thing. So just start doing it. Oh, there's a little one over here. A tiny Knoxville divergence right there. So anyway, that's what I got for you all. I'm going to check the questions one more time, and I'll pull up the website here. And super happy to spend time with you all anytime. Do you go long when it breaks above the pivot on the hourly? How long do you wait? Do you go long when it breaks above the pivot on the hourly? No. Let's walk through these rules again, Mike. Happy you're here, Mike. So I'll reset the chart. And what I'm going to do is pull up screen capture here and walk you through the rules one last time. Misses a daily pivot going upward. I wait for it to retrace lower. If I can get it to go oversold, that's a buy trade. If I can get it to break a trend line, that's a buy trade. Because this missed pivot here is telling me price wants to continue going upward for 48 to 72 hours. So if price is moving above the daily pivot and the day is over and we're above the daily pivot. So now, Mike, I understand what you were asking. Yes, you wait for it to travel an entire day and stay away from that pivot. You stay away from that pivot. Don't go anywhere near that pivot, and then you're good to go. Everybody wants to know cost of the robots. You know, I don't know. Let's find out. I don't know what they're on sale for right now. You want to find out? Let's find out. It's probably $1,000. I don't know. Let's see here. 197. I got that wrong. Don't even know how much my own stuff costs. 197 bucks. Go get them. I mean, seriously. I mean, it's not going to change my life if you buy them, but it might change your life. That's a good sales pitch. Come on down, everybody. Bring the kids. We're having hot dogs in the parking lot, and bring all the family. It's the Scenorial Day robot sale. I really love you if you buy the robots. I also love you if you don't. I just love you no matter what. And Traders Talk Live, thank you for having me. Let me basically destroy the decorum of your webinar environment. Really appreciate it. It's always nice to spend some time here with everybody. Thanks so much for having me.